Today, I'm going to showcase to you exactly how you can find the best concentrated liquidity pools for Uniswap v3. I'm not going to hold back any different strategies that I have, so let's hop right in. Now, the first tool that I'm going to be taking a look at is going to be Builder Metrics, and full disclaimer, this is our own in-house tool, but it's 100% free to use. There is no paid features, and we developed this just so we can use it for ourselves. That's how good it is. It's developed by liquidity providers for liquidity providers, not some big corporate entity, not by some random person that doesn't know what they're doing with liquidity pools. So hopping in, the first thing you're going to want to do is launch the app, and we also just released V2, so it looks a lot better for those of you that have been long-term users. But with that being said, we're going to head over to the Discover page. The Discover page is where you're going to find all of the liquidity pools, and from here, you could sort by a few different things. Number one being fees, obviously, but also risk, price volatility, TVL, average fees, all of that type of information. Now, if you go over here and you sort by estimated 24-hour fees, you're going to see that some of these pools are going to pull in like $3,900 per $1,000 deposit every 24 hours. Obviously, this is going to be inaccurate. Now, this is inaccurate data, and the thing is, it's not on our end. It's actually the Uniswap API that is reporting inaccurate data to here, and we're pulling directly from the Uniswap API, which is why it shows some discrepancies here. Another thing I will mention is this assumes a range of plus 25%, minus 25% on the price. So occasionally stuff will show very, very high when it should be a broader range and actually get a lower return, and then occasionally stuff will show very, very low when it should be higher. So personally, I don't like to sort by the 24-hour metric. I like to sort by the overall fee to TVL ratio. This is essentially going to show us liquidity pools that have a very high amount of fees compared to the overall TVL of that liquidity pool. And from here, we could filter out some of the coins that honestly have no use case, and we could go down the list. If we head over to page 3, this is exactly where we're going to start to find some high quality stuff. So one example is going to be this Aleph to W ETH position. This is showing a $15 estimated fee per 24-hour per $1,000 deposit. Now, this has a reasonable amount of volatility, only sitting at 9%, and for reference, ETH as well as some other assets are sitting at around 6%, 7%. So I would say this is a good pool to pull up. I'm going to go ahead and click simulate, and it's going to pull up the page where we can actually calculate the potential return. Additionally, I see this wrapped towel position that's showing a $6.68 return per $1,000 deposit, and this has $36,000 in fees and only 15 million TVL. I'm also going to pull up this pool right here, and we could go further and further down the list until we start to find some crypto assets that we are familiar with. Now, personally, my strategy is to find different crypto assets that I don't mind holding. And the reason why is because if I'm hopping into random stuff that I don't really like, I just like the return that it's giving me, well, I'm going to make emotional decisions. As soon as that pool maybe goes down just a little bit, I'm going to be a little bit scared, and I'm going to end up exiting the pool at a loss when it could come out to an overall profit. So by finding positions I am truly bullish on that I actually believe in, that's going to allow me to make better informed decisions. So when we're on wrapped ETH to the left, I have never seen this pool before. So in order to find this position, I'm going to pull it up over on Uniswap, and then from here, I'm going to go over to the Aleph token, and then I'm going to essentially pull up this token over here on CoinGecko. So I've got the token right here, and now I can look over at the 3-month chart, the 1-year chart, to essentially see exactly how this token is doing. And one thing I'm going to notice is over the past 1 year, it's done really well. It's up 370%. The other aspect is it's up 20% in the past 30 days. So this actually seems pretty interesting. I'm also looking for different trend breaks. So as you can see, it broke this trend right here. It went from 17 cents all the way up to above 40 cents. But then it retraced very, very quickly all the way back down to 20 cents. Now, that doesn't matter too much to current price because obviously it's shown consistent upwards trends. However, the one thing that I'm taking note of is if it's going to go up that much and crash down that much, I am going to need a broader range when creating my liquidity pool. So going back over to the simulate pair page on Builder Metrics, here I'm going to want to zoom out on the calculation range. That's going to show me more data points on the correlation chart. Now, remember with crypto to crypto pairs, we're not looking at the dollar value of Aleph or Ethereum. We're actually looking at the correlation price. So how many Aleph equal 1 Ethereum? That's what instance we're looking at it. Now, plus 25 minus 25%, as you can see, that's getting us 411% APR over the past 90 days. The reason why we use 90 days is because we want to be very, very reasonable when calculating potential returns. 90 days is going to factor in the past 90 days worth of data, so it is going to naturally be more accurate. The other thing I'm going to notice is, as you can see, we would have been in range all the way over here, except out of range just a few times, but also all the way over here, we're not going to be in range. So I do need to give some allowance to that just in case there is a period where Aleph doesn't do too hot. And for reference, when this price is going down, that means it takes less and less Aleph to equal 1 Ethereum. And as the price is going up, like these short little periods right here, it's taking more and more Aleph to equal 1 Ethereum. Basically what that means, when it's taking more Aleph, that means that Ethereum is outperforming Aleph. Whereas when it's taking less Aleph, that means that Aleph is outperforming Ethereum. So if I think that this Aleph asset is going to do really well in the long term, I'm going to want to bring this min price down. But personally, I'm going to bring it down to something like 4,500. And the reason why I'm going to use 4,500 is because I do want to give some allowance in the case scenario that Aleph does really good. And I'm also going to bring this max price up, so that way, in the case that Ethereum does do a little bit better, we have room for that. Now, personally, what I'm looking at when I'm structuring this pool is the asset ratio. So this ratio right here allows me to retain 60% exposure to Aleph and 40% exposure to Ethereum. If I personally believe that Aleph is going to do really hot, I'm probably going to want to start with 80% Aleph. I can tailor that by adjusting my range. Whereas if I think Aleph is going to do better in the long term, but maybe there's some periods where Ethereum does do better, maybe I want to start with like 65 or 60% Aleph. So I'm going to go with 65%, 35% basically. That's going to give me 192% APR. That's not too bad whatsoever. The next thing I'm going to do is zoom in, look at recent data, and essentially see exactly how that's going to perform. And as you can see when we zoom in, we're showing a 311% return. That's because volume has picked up very, very recently. The other thing I'm going to look at is liquidity distribution. And you can see we're right to the left of a big spike of liquidity, which means that we're actually not accurately calculating this pair. It's showing 311%. It's going to do less than that as soon as the price moves back over there. Because if we move the price a little bit, we go from doing 311 to 102, because there's more liquidity on these price points than there is right here on this little dip. So if we got in this pool, we would want to hope that the price does not go back over here, because that's where other liquidity providers have a lot of their liquidity. But hopping in this pool, I would just essentially assume I'm probably going to get about 125%, mainly because if I hopped in right now, I am going to get roughly 311% annualized. However, over time, as the price moves around, if it goes back over in this period, I'm going to get 100%. So it kind of averages out about 125% APR. That's not too bad. I do have to determine, is Aleph an asset that I really want to hold in my personal portfolio? If it is, and I really like that return, then I'm going to hop into this pool. If it's something that I don't like and I don't want to include it in my portfolio, then I am not going to hop into this pool. So let's go and take a look over at Ethereum to Tau. Now, one of the reasons why I did select Ethereum to Tau is because one of my clients has made over $6,000 in just the time span of about 10 days in this single Ethereum to Tau liquidity pool. They made $2,000 nearly just from earnings, and they made roughly $6,000 overall profit loss. The best part is they didn't deploy a ton of money. They deployed roughly $10,000 into this pool. So that comes out to a 60% return on investment just in the time span of 10 days, which is great. But let's take a look back over here at wrapped Ethereum to Tau and see if it's still printing an absolutely absurd APR, because this did happen roughly a week and a half ago or so. So hopping back over to Builder Metrics, over here, first thing we're going to look at is liquidity distribution. You can see there's a lot of liquidity on current prices, not a lot of liquidity on these outlier prices, which is good because the current price is where there's a lot of liquidity. That means that we are going to be somewhat accurate when calculating this. The next thing I'm going to look at is volume consistency. Has the volume been consistent over the past 30 days? And it looks like, if anything, it's actually picked up, because right here it wasn't doing too hot. Here it did really well, and then it wasn't doing too hot, and now it looks like it's actually starting to pick back up. So I want to factor that in. Maybe I want to go with a little bit shorter of a calculation range, but we'll cross that bridge in a little bit. The first thing I'm going to do is adjust my range. Now, personally, I think Tau is going to outperform Ethereum in the long run. I do think there are going to be some periods where Ethereum does do well, because Tau has done really, really well over the past couple weeks and couple months, basically. So I would want to include room for a potential retracement. So first thing I'm going to do, I'm probably going to bring this top range up to like 6.5 or something like that. That still has me at roughly 233%, but that gives me 54% Tau. I personally want to start with 65 to 70%, depending on what the numbers are. So I'm going to start to bring down this min price right over here. That gets me to 65% and 174% APR. Now, if I'm really bullish, I would bring it down to 70%, but what's going to happen when I bring it down to 70%, I'm now getting 150%. So in my personal opinion, it's probably better to keep it at about 65%, get that 175% APR. The other aspect, if I really want to play it on a short-term basis, I could bring this top range over here down a little bit, and that will also adjust the amount of Tau I have in the pool. And if I bring it to something like this, that gives me about 67, 68%. I'd probably settle for 68% and get about 185% APR, because the range is getting a little bit narrow. It's just the bet that we're taking is obviously that Tau is going to do really good, and it's not going to break through this, because we don't want to have a ton of impermanent loss once hopping into this pool. Now, the next thing I'm going to do, drag out the calculation range to determine, okay, well, it looks like there are some periods where ETH did a lot better than Tau, but more recently, ever since like, late January, Tau was doing really hot, and now it's been consolidating. Now it's been correlated with ETH. And we can drag that on a more short-term basis, look at the past 14 days, see what type of yield we're getting. And this right here is consistent volume, and that's getting us 158%. So realistically, we hop in this pool, we're getting about 155% APR. I'm personally happy with that. I think Tau's a very good asset to hold long-term. This is one of the pools I'm considering. And personally, I would have already hopped into this pool, but the thing is, it is on the Ethereum network. The Ethereum network has very high gas costs, whereas if we head over to the Arbitrum network, we're going to pay $1, $2 in gas costs as opposed to $50 to $100 per transaction. One thing I also want to mention, Arbitrum network is live on Builder Metrics. We did have a period where the Uniswap API was down, so we couldn't really pull any data. Arbitrum is back up and live. Optimism is back up and live. Polygon is back up and live, and so is every other network on this list. So you can use Builder Metrics without any issues whatsoever. So if you are looking for pools that have lower gas cost, I highly recommend you head over to Arbitrum, Optimism, Polygon, and if you really want to, Base, but there's not too much liquidity over on Base. There's not nearly as many opportunities, just a few different blue chip pools. Now, another thing I'm going to factor into this analysis is obviously the correlation between Ethereum as well as Tau. So I'm going to head over to DeFiLlama.com. This is the next tool that we're going to be using, but we're going to head over to the correlation matrix. We want to look at Ethereum, and we also want to look at Tau. We could type in WTau, you're not going to find it. That's because the actual asset is Tau. It's just essentially what we're doing is we're wrapping Tau. We're getting an ERC20 version of Tau. That's why it shows WTau right here. Actual Tau is on its own network. Now, over the past year, Ethereum and Tau have a very high correlation. The maximum is 1. The minimum for correlation, meaning no correlation, is 0. And then negative values mean there is a negative correlation between the two assets. But looking at this, it's 0.9. That's not going to do us too good because as we looked at over the past year, a lot has changed. You can see there's periods where Ethereum does really well, periods where Tau does really well, Ethereum does really well, Tau does really well, so on and so forth. So we're essentially going to want to head back over here, look at the 1 month chart. How does that hold up? And as you can see, about 0.78. That's not too bad. Past 7 days, about 0.9. So once again, still very correlated to Ethereum. Now, I wish we could really drag this out over 14 days, 45 days, 90 days, 180 days, all those periods, but unfortunately we can't. But what you would notice over this period, 7 days, 1 month, and 1 year, is it is very correlated. So this is a pretty good pool to go into, mainly because it's correlated asset. And if you paired Tau with USDC, you could get a higher return. I'm not entirely sure, but what might end up happening is you get your Tau sold into USDC, and with the bull market that we're in right now, you don't want to be sitting in USDC because the market's constantly going up. You don't want to be sold into USDC basically. But bringing it back over to DeFi Llama, you can also head over to the yield section, and from here you could go to project, and you can clear all projects and look specifically at Uniswap v3. This is going to show you all the concentrated liquidity pools. You can select the chains you want to analyze on. So maybe I want to specifically analyze on the Polygon network. I'll select Polygon, and for some reason it's not showing any pools. And you can specifically select what networks you want to analyze on. So in this scenario, I'm just going to analyze on all networks. You'll see there's some Optimism, some Ethereum, some Base, and some other networks mixed in here. What I'm going to do is put in a few different parameters. Number one, I'm going to put in a $1 million TVL. The reason why is because I want to look for pools that have high liquidity. I don't want to be stuck in some random asset and then there's no liquidity for it if it does end up falling in price. Next thing, I'm going to look for stuff that has about a 30% APY. Now, the reason why I do 30% is because this APY is based on a plus 30%, minus 30% range. So essentially, it is going to be a broader range. And when we do go into this pool and we narrow it down, it's going to be a lot higher. So maybe I do, instead of 30, like 45%. That's really going to find some of the high return stuff. Right here, I see Uni to Ethereum. This shows $31 million in TVL, 64% APY, not too bad, and 36% average APY. What I'm going to do is bring this over to Builder Metrics, and the reason why is because I want to determine what actual return I'm going to get, because again, that's just an estimate based on a range that has plus 30%, minus 30%. But obviously, if you guys have been watching, you know that ranges are a little bit more complicated than that. So we're going to go over here. And as you can see, there's a period where essentially we would have been out of range in this pool, and there's a period where Uni just did really good. I'm going to zoom out a little bit. I'm going to bring that range a little bit broader. I don't think it's going to retrace all the way up here, and we've already kind of started that retracement, so I'm not going to try to capture all of that, but I do want to have my range about right here. So we'll do like plus 28%, 27.79, whatever it may be. I'm also looking at asset composition. I'll probably do about 60% Uni. Again, I do think Ethereum is going to have its little run before the entire bull market kicks in. But yeah, we look at this, and you can see that's doing a 47% APR. Not too bad. What you're going to notice, recently, on this one day, we had $80 million in volume for Uni token. That is absolutely insane. And then over here, it has died down. but this volume that we're seeing right now is a lot higher than over here. So what I'm going to do is I'm going to bring the calculation range down to like 3 days. I really just want to zone in and see what actual return I'm going to get. And it looks like about 110% APR, which is really good. If I bring it out to 10 days, you can see that's coming out to roughly 120% because it is encapsulating that really high day of $80 million in volume. And then if I bring it out to 14, it settles down to about 92%. And if I keep on bringing it out, it's going to settle back to that 45%. And once again, looking at liquidity distribution, we are right where the most liquidity is. So if anything, if the price starts to move to the right or left a little bit, we're going to be getting a little bit higher of a return. As you can see, this is showing 92% over the past 14 days. As we move this over, we're now getting 116, 120, 130, and then all the way over here, 140, and then 160. That just goes to show how current price and liquidity distribution can affect the actual return that you're getting. Assuming we like this position, we just hit create position, brings us over to Uniswap, and we are able to actually enter into this position. Now, if you guys want to dive deeper into what I just showed you and learn exactly how I'm making nearly $5,000 per month, which is about 10% return on investment every single month on my DeFi passive income portfolio, utilizing crypto assets that I really want to hold in my portfolio, then I do recommend you check out our private community. It does come at a monthly cost of $75 per month, which is very reasonable considering other people charge $100 per month, $150 per month, and provide like literally 10% of the value that we provide. But you're getting access to weekly live calls. We just hosted our last one literally 2 days ago, and we go over the best opportunities and we answer any questions you may have. It's your opportunity to speak up and ask me questions personally. You also get access to multiple mini courses with new ones being added every single month. We sell those for $35 each. And you can really pause this video, just go to the URL down below in the description to join or just look at more information. And what I'm going to do for you guys is I'm going to give you a 50% off discount. It is only going to last for 7 days, so it's currently March 1st. It's only going to last until March 8th, essentially. So this is your opportunity. You're essentially going to be paying $37.50 per month for your first 3 months. That's going to kind of give you a taste of what we have to offer, basically. And as you can see, what we have to offer is pretty great. You can scroll down this list and see all of our client results. We have some clients that made upwards near $56,000 on single pools alone, which is absurd. But if you guys did enjoy this video, make sure to drop a like, subscribe, and notifications turned on. And as always, I hope to see you guys in the next one, and I really hope you enjoyed the value that I dropped today. Peace out.